Hi, Tower Talk listeners. Thanks for tuning in to another episode. Mark and Tarek here. We're going to jump right in this month because we got a lot of stuff to cover. Firstly, we're halfway through 2025. It's gone by in a blur. So I just want to do a bit of a recap. Just 3 months ago, the world was kind of reeling from the Liberation Day tariffs imposed by President Trump in the States. Markets were down and things were looking, people were scared. Things were looking not so good. 3 months later, though, up to the end of June, TSX is up 10% on the year. S&P 500 in the States is up 6.2% in the year. Now, if you watch the news, particularly the financial press, it's really hard to get an idea of, okay, is this a good thing? Are we, in the calm before the storm, or market's going to drop? So I just want to touch a little bit on what we are seeing in the market, look at some specific indicators and what we expect going forward. So it's kind of a mixed bag, right? So we want to bust through that financial press and tell you what is actually going on. In the United States, we're seeing manufacturing new orders up significantly month over month, 8%. I think
Mm.
this is up to April or May, which is one of my favorite indicators because it just, indicates, that forward looking, like let's ramp up production because we have a positive outlook. Jobless claims are down in the States. Credit spreads are moving in the right direction. The yield curve is positive. There are some negatives for sure. And the big one is inflation came up higher just a couple days ago, which means the Fed might not be willing to cut rates as soon as we thought. In Canada, a little less rosy. Housing starts and building permits aren't up as much as we should have them. The yield curve is positive, so that's good. The other indicator I really like to look at is gold. We don't love gold as a an asset class, but we do love it in terms of it's a safety asset. And so gold is through the roof. So it indicates that people are a little bit scared because that's where they put their money when they're a little bit worried about things. But so it's kind of a mixed bag, but it's not all one way or another way as you'd often hear or if you often read. And so just wanted to give you a picture of what we're expecting going forward. It's looking okay.
Can I recap a little bit of that? I would say what I think we've seen is a rotation from those Fantastic Seven or Magnificent, whatever they were,
Yeah.
the IT to grassroots, ground level industrial companies. That I think is what's happening right now. And therefore, the market is actually continuing to do okay, but it's not in the same areas as last year. Okay, move on to that article that you read about investment executive.
That's right. I'm going to put a link to the article in the show notes or in the email you received. It's an investment executive article. The Ontario Securities Commission, in partnership with a regulatory organization, did an anonymous survey of 2,900 bank employees regarding independence, and their sales targets and their sales pressure and what they're required. Big surprise. um, but it turned out that the sales targets, the sales pressure, and the tactics imposed on these bank reps is leading to them feeling significant pressure, wording of the article, to move products and services that are not necessarily in the best interest of their clients. And this was regarding basically independence, bank independence. At Tower, we're bringing this up because we are truly independent. We have no
Mm.
bank that's saying, hey, if you sell this fund, you'll get a little bit more, or we require you to move this product or that product. We just do what's best for our clients. So it's a very interesting article. I recommend you read
Yeah.
it.
So let me jump in there to say that got me on my self-righteous high horse to want to say, well, at Tower, we are different and we are better and we are all of those kind of things. And it's not completely true, especially in the words of our compliance officer, chief compliance officer, who's saying, don't overstate.
Yeah.
And I'll try not to do that. But when we built Tower, I thought, well, let's spend a few minutes talking about what we did when we built Tower, Tarek and I. We built Tower with separately managed accounts. Okay. Separately managed accounts means your securities, your investments are in your name, in your account. It's really important. Not everybody does that. In fact, to get that kind of service is difficult. Number two, it means that when you have securities in your account, you can transfer them out. Not what we want to do, don't go there. But when you want to transfer them out, it doesn't trigger a tax event. You can transfer them in kind, and your gain in the securities goes with you. You don't go to cash, pay taxes, and transfer out the cash. So number three, you can look and see what is in your account directly
Hmm.
anytime. Then we set up a back office with Index and CI funds so that you can sign in anytime, any day, any through the year and see where your investments are. One, what do you own? Two, what are they valued at? Three, what's the book value in it? You can actually go and look at a page called performance and analytics and figure out how am I doing relative to the markets and all that kind of stuff. So
Hmm.
that's the reason that we went there first. We've got some other things that we did. What were you going to talk about, Derek?
I was going to talk about co-investment. This is a really important concept for us. Mark and I and our spouses invest in exactly the same strategies that we're recommending for our clients. We pay exactly the same fees. There's no employee pricing or principal pricing. We pay the same fees. We invest in the same things. We would never recommend something to you that we are not invested in. We think that's really important because we believe in what we're doing.
In fact,
Addition, yeah, go ahead.
mm, go no no where were you going?
I was going to switch on to fees.
No, hang on a second. In fact, Derek is testing a new strategy right now with his own money
Hmm.
because we have to prove that the theory works. We've got a great theory. We just don't know exactly that it'll work in cash. And we're using his money to run that risk. And he's even paying fees on it. Are you?
Absolutely.
Are you paying fees on it?
Absolutely. Same
Good. I
fees,
wanted to
no
know.
no special pricing.
Okay. What this also allows you to do, and then we're gonna come back to your fees in a minute, is a relationship with us personally. And that's what we wanted to do. We're trying to maintain that with podcasts. We are certainly available to you, but this is different than you going into a bank or a broker and talking to them about your investments. Do they manage your money? Not usually.
Hmm.
Usually the portfolio manager is off in Boston or Vancouver or Toronto or San Francisco or wherever they are. They are many iterations away from you, the investor. We are the ones who are doing the cooking in the kitchen and we eat the cooking. Okay, back to fees for you. I think we're wrapping up.
Absolutely. Yes, we're getting close to the end. So thing about fees, we ensure our fees are competitive. They tier down pretty significantly. So the more you
Mhm.
have with us, the less you pay per dollar, if you want to think of it that way. And that's important. If you want a specific fee schedule, I can absolutely send that to you. Send me an email and I'll do that. Additionally, we have no additional commissions or anything that's charged us. We get paid for investment management by fees charged on your account. We don't get paid by a product or service that's sold. We don't get paid from, soft dollars, they call it, from a brokerage or something like that. And the only cost to your account that isn't coming to Tower is trading fees, and those are relatively cheap. We've negotiated a very competitive trading fee at, a penny a share or something like that, and that goes straight to our broker. It doesn't go to us at all, and so we have no
And
incentive
that's
to do that.
by account. So when you trade in that account, the fees for that are only related to that one account, not shared by anybody else. In
Yes,
other words,
exactly.
our client is not picking up costs from other people.
Hmm.
Okay.
And then no penalties, no,
Yeah.
if you need to redeem, if you need to pull out some cash from time to time, we invest in very liquid securities, T+1 day to get cash, and then, 3 or 4 days to transfer it to your bank account. No problem, no penalty for that. Just the trading cost, which I mentioned, does not come to Tower, and that's important.
Happy redemptions. No
Hmm.
pain, no penalty. And then we do this podcast, which nobody does.
We're the only ones.
No, everybody does a podcast. Maybe we should stop doing these podcasts just so we're different.
Yeah,
Or
right.
maybe we have to do the podcast just so that we're in the game. Anyway, as long as we've got information for you, we will keep doing podcasts. Which leads me to the next podcast. You will want to see it
Hmm.
because we're going to tell you about a new product that we're going to offer to you. And we think you'll like it. We think we're having fun. We thank you for your business. Wrap it up, Derek. Is your email going to be on this podcast?
Absolutely. My email or info@towerasset.ca, that comes to me as well. But yep, absolutely.
Great. Okay, wrap it up.
That's it. Thanks for tuning into this episode. As always, give me a shout if you have any questions, concerns, or if you want to have a topic idea we can discuss for you.
Good idea. Bye bye.
Talk to you later.